Yeah, you're actually a bond trader because yield matters. But I digress. Thank you guys for logging in early. Good to see everybody. Hope you're having a wonderful day. Today's going to be the day that I'm going to trade Forex with you. It's Thursday, June 11th, 2015. It's time for your daily Forex trading strategy session. As always, I'm recording this, and as soon as we're done, I start uploading it to YouTube. If you're watching this video, thanks for hanging with us, but you got to pay it back. We have a standing rule in our community. If you watch the video, document what you learned. If you don't leave a comment, shame on you. Your mother would be embarrassed and disappointed in your lack of whatever. And look, if you just got to go like your house is on fire or something, at least just click a like. I mean, what does that take you? A quarter of a second? Oh, well, I can't do that, Wayne. It's too much effort. Well, then stop breathing my air, huh? So let's get going. Oh, I guess, am I going to introduce myself? I guess I should. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. We're an ECN, trade Forex, energies, metals, indices, binary options. We do it all, and we love it and have fun. These sessions, it says here, 7:30 to 8:15, but I actually go to about 8:45. I think yesterday I went to almost 9. That's how I roll, under promise and over deliver. And every Friday, fxstreet.com. See you there. Let's get going. Beep. Boom, ba, 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 bum, ba, ba, bum. Now let me remind you that trading and investing is risky business, not appropriate for everyone. Your past performance does not predict future results. Therefore, stay small, stay humble, focus on the long term, and never risk money, count on board to lose. Don't touch the stove, it might be hot. All right, so here we are. Where we left off. I have a burning feeling here, and I don't know if it's legit because it's a feeling. And I generally don't have feelings. I am growing concerned that we are going to get stuck in the rut of summer trading. You can make money in the summer. Oh yeah. But I don't think you can use the same strategy. What happens if you continue to use the strategy that worked last month and the markets change this month? What generally happens? Yeah, it's not going to be as successful as you would like it to be, right? So I'm not ready to call it yet because I don't want to freak you guys out. But let's just say in the next 30 days, I think that's a reasonable guess. In the next 30 days, I would expect volatility to wane. That means dry up. And that if you typically used to like do, let's say, 33.99 OCOs, would that be a typical swing trade for you? 33 pips stop, 99 pip winner. If you get it right, you get paid. Kind of like that. Yeah, I mean that. Right? I mean, you're disappointed if you don't get 100 pips. So maybe you move your stop, you only get 50 or 60. Fine. But if we don't have the volatility, the average daily range is likely to dry up too, and we're probably going to move sideways. Like I mentioned, I think it was yesterday, you can get situations where it's like down for 3 days, sideways for 2, up for 3 days, sideways for 2. And we kind of do that, get stuck in a 300 pip range over the course of 6 or 8 weeks. If that's the case, if that's what you have observed in the market, remember you need to do this, then I would change my strategy slightly and maybe move to a 25 OCO if it's the middle of the day, or 25.50 OCO. Okay, where the average daily range I think will slow down from maybe, what is it now? Probably 110 something. It's been good lately. It could just dry up to 80. and you're sitting around waiting for a 99 pip winner, and the market's only going to move from top to bottom 80, and it's unlikely that you're going to get the perfect, 80, right? So, so that's where you dry up and say, well, if I can get 50 pips out of an 80 pip range, I'm feeling pretty good about myself. Okay, so I just got to, we need to be aware, is what I'm saying. Okay, we just need to be aware and remind ourselves that this is not a video game. We're not just looking at a bunch of colors and throwing money down. That these colors represent simply price over time. There's only two things on this chart, right? Price and time. The price-time continuum. And it represents market participants adding money to the market and withdrawing money from the market. And if market participants, a significant amount of them, kind of just go away or stop participating, then the likely outcome will change. We need to ask ourselves, the same as always, what are the market conditions? Are we trending? Are we trending up? Are we trending down? Or are we trending sideways? And then we need to use the right tools, have the right strategies, and adjust our expectations accordingly. And I would guess, see, I don't know, but I would guess July and let's say at least the first half of August, average daily range could diminish based on less market participants participating in the market. Would anybody tend to agree with that guess? We don't know, but it seems reasonable enough. The market could get thin. The trends could slow down. Okay? So then we need, as since we're smart money, we need to observe if that happens, and if so, when it happens, and then make the right adjustments to our trading. Okay? Cool? Great. So, one way of looking at this is, what if Euro USD just moves from up here to down there, basically? That's it. For a while. Could happen, right? Let's say the upside is, let's say 115, the downside is 110. What if that's the next 8 weeks worth of price action? Now, one of the reasons this happens is that some of the market participants are actually pretty important. So let's just do it like this, okay? All right, so there's maybe, what if we're stuck in there for the next 2 months? Some of the market participants are more important than others, or even most market participants. Which market participants are those? Who would you guess is the most important market participant? Pension funds, banks. Can you be more specific? Central banks. Thank you. That's what I'm going for. When's the Fed meeting? So that's probably the first day of summer. Once that comes out, Mark, the rest of the big players are going to make their trades and then go away. Okay. When's the next Fed meeting? No, the next one. Not that one, the following one. September. That's the beginning of the rest of the year. No, it's not end of July. It's a August/September meeting. I always forget. September 9th? I don't know. Whatever. Okay. Fed meetings are every 8 weeks, roughly. So there's that period, right? So now you got to put two and two together. The Fed doesn't raise interest rates, but they talk about a dramatic improvement in the employment situation. The market doesn't really know what to do with this. They were hoping for a rate increase, but they didn't get it. So the dollar weakens. And then they're like, wait. The Fed actually said some good things. They'll probably raise in September. And the dollar gets strong again, and there's our range. And then, generally speaking, nothing happens until we get closer to September. Then a few weeks before the September meeting, people start front-running what they think the Fed's going to do in September. How does that sound as a plausible strategy using, I don't know, trader psychology? Does that seem pretty reasonable? And between the Fed meetings, there's going to be some reactionary time after the June meeting, and then there's going to be some front-running time before the September meeting, and everything in the middle is called summer. Have you ever seen a European work in the 4th week of July or the 2nd week of August? You can't force a European to work at that time. I don't think it's possible. Hey, Sven. Anyways, I'm in Lapland. So there's the thought. Yeah, maybe, Mark, but again, the ECB is incapable of doing anything in the summer. The IMF is probably the same. Okay? Yeah, but you'd be surprised at how remarkable Europeans are at avoiding making a decision, no matter how obvious the decision or important the decision is. They have the capability of putting it off till later. It takes hundreds of years of developing such a skill, but they've mastered it. Okay? So don't you worry about that. Oh, it'll just go on beyond belief. All right. Like, for example, how long did it take Draghi just to, do quantitative easing? Right? Now, first of all, you had to get permission from Ben Bernanke. Because, they don't want to fight each other. But anyways. So, here we are. Boop, boop, down, down, down. So, how do we play this? Well, generally, we're only going here. Okay, I can't assume it's going to break out. I'm going to assume we stay in the range. So it's a double top, Euro USD hourly, by the way. There's our pivot clusters and everything that we've already identified. Bottom of the range is down here. Okay. So if you believe we're going down there, selling rallies is a pretty good idea. You had some drops in here already, right? And then there was this one too. You're getting pretty close to 12. This looks like tomorrow's trade if you're not in it now, I don't know what you wanted to do. And if you didn't know what to do, then that's fine. You shouldn't be in it. But I think selling was really, really, really late. But I think what could happen is we drop down into the psych level, hourly 200 EMA, which is fair market value. I would assume that that's going to impact price. Just my guess. Okay. But I'm assuming that's going to hold. But also, I've already established that we're going down here. If I'm wrong, we'll find out. We'll find out later. All right. And that'll change the outlook. But right now, that's the assumption. Right? So we got this top, and we get, right, we're getting these moves. Then we get the breakout. Then we get the pullback way up off the 21, which is, the roll reversal, right? Right? Nothing complicated. Okay, so now we head down here. What's it going to do? It's going to come up. It's going to kick off this. Or it's going to fib the whole area. Let's do that. Okay, now you take this area and this area. 50% is about here, so in that case, it could do this. Three-wave correction, whatever, and then it goes down here, and it goes here, and then it goes here, and then it goes here. All right, so this is hourly. This puts us tomorrow making this decision pre-London, probably, right? So down the rest of the day, then some sideways act, Asia fade up, drop it like it's hot, London open. It could go up maybe a little closer to 13, which would give us a 618. Fine, same thing. What do you think? Yeah, you guys are good. I love it when you agree. Feel free to, challenge if you want. Okay. This is going to be an issue first, isn't it? I think what it might end up doing is one of these things. Could do that. That's a whole different scenario, isn't it? Well, we'll know if we break below here. So, anyways, we'll pay attention. Okay? So, look at this. We drew this red area in the second week of May, so a month ago. Was that red area helpful yesterday and today? That's why we draw them. So we call this red area support. Okay. So let's zoom in here. For now, since we've made a lower low, I am going to, well, it's one of these things. You had an opportunity to buy it if you thought it was going up. Very similar to what we got going on here. Okay? If you didn't do that, you're a bear, which is fine. And you're looking for this. If you're a bull, that was your support, right? Okay. Yeah, Igor says, well, for the news isn't good or isn't going to be good and stuff. Well, that's your alpha. You have to decide whether you believe you're bullish or bearish. Okay. And therefore, you'll have clarity of in which, in the actions that you want to take. Okay. So you could be someone that does this, and you're thinking down. Right? Because we're already playing a series of lower lows. Okay. Yeah, if their economy is hurting, why would retail sales be good? Right? It's not complicated. That's why we have trends, guys. Most of the time, it's obvious. But if you expect a recovery in oil, not a rebound, but a recovery, stabilized price around $60 or $70 a barrel, then maybe you buy the kitty cat or something. Your call. All right, gold has had the audacity to get back near 1200 for shame. Look how the technical analysis works, huh? Just came right back and got sold off. We're kind of in here now. A bull would want to buy the weekly central, would want to buy the roll reversal. Oscillator's not ready on the 4 hour. Okay, but it's thinking about it here. But I'm a bear. I'm a bear. I'm a bear. Been a bear for so long I can barely remember being a bull. Oil still moving sideways. Fine. Look at the stock market. I think we talked about this. Did we talk about this on Monday? Hit the pivot profit zone, go back to the central. Well, anyways, we'll just cover this here. This is the S&P 500. Let me ask you something. Do the traders of the S&P 500 use pivot points? See, this green area is the reversal point. Okay. The rule of thumb is if you hit the reversal area early in the week, by the end of the week, you're touching the central pivot point. What it does after that, I have no idea. But this is the central pivot point. And indeed, we touched it. Cool. A new buy zone would be in here. Okay. So very nice. It went lower than I would have preferred, but you can see in here is where, you know, we're fine. It's, you know, it's a little lower than I would have liked, but sometimes the market's got to get extreme to do what it wants to do. Okay. I have a tingling here. I kind of want to do this. Just draw it out. Boom, boop, 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 boom. Do, 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 do. And DAX. Yep. So DAX kicked off of our 50%. Seems pretty sweet to me. We had a chance here on the 382 and it failed, so you could have just done it again off the 50%. Nothing remarkable going on. All right. How about that yet? That's our USD yen. Wish it was easier, huh? So it came down to 22.5 and stabilized. Let's discuss why. I'm going to, let's add an indicator. How am I going to do this? Indicator. Daily false. Monthly true. Average pivot false. Okay. Let's see if pivot points had any effect on it. Oh, it's a monthly central pivot point. Does anybody think that that could be a coincidence? It's not just a pivot point, it's the central pivot point. How many people feel like maybe pivot points are important to trading? Anybody? Kind of like, golly gee whiz, Batman. I like it. Igor's like, well, if you got monthly and weekly and daily, it gets cluttered. Well, that's actually what you want. Because then what you do is you look for clusters. Okay? And so that you can guess at what areas are important to different people for various reasons. There's another one. This has the monthlies twice. And then there's weeklies. And then let me change this now to daily. Monthly false. Daily true. Should I put hourly pivots? Should I put 4-hour pivots? Make it really complicated? All right. Okay. Dun, 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 dun. Let's clean up our mess completely. Delete, 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 delete. No. All right, so what I like to do is look for clusters. So we have, this line here is a pivot point of some sort, and it's also the daily central pivot. Might be interesting. This whole area in here, weekly S1, daily R1, this whole area could be an area of concern, aka short zone. Could be. Could be a rabbit, could be. We have a weekly pivot here inside of a daily reversal area. So price could work its way up, in which I would probably sell. Plus, I would assume we break DM4, but not quite get to R2 unless it spikes up and comes back down. That happens too. But whatever, this whole area up here could be an area of interest. Okay, and you could take it even farther. Let's say you are a bull, come up to here, wimps out, breaks up, wimps out, and because of the role reversal this way, works its way up. Okay. So are there amazing clusters here? Well, there's the monthly central, and there's the DM3. So there's a cluster there, like, it could have gone one more, and it would have been just as important. But we didn't need it, okay? So, Igor says it can get, too many lines. Well, what you're trying to do is find where they overlap and ignore everything else. So, like, how about this area here? Okay? Area of concern. This whole area here, reversal zone with a monthly central. Okay? Concern. This could be an interesting zone as well. So you could just sort of mark it up of areas to pay attention to. So let's say you do that with yellow. You could mark this on your chart like, be worried up there, be worried about there, be worried up there. Okay. So you want it to be clustered. Right, perfect overlap here. Right. I tend to adjust. I like to have. Oops, that's not the right one. I like to have my pivot profit zones identified for the week. Okay. So I'll look at this. I'm still worried about this here, even though this is the target up here. I don't think it's going to be that easy. Okay. So if price comes up now and hits this area and then decides to reverse again, work its way down over the period of time, the target's going to be here. So we'd head back down to 120 on this USD yen. Okay, and what I'm taking is the monthly R1, monthly S1, typical inside month. And that would give us our giant range for the summer, wouldn't it? See, I know what you're thinking. You're probably wanting it to do this. That would be great. Right? That would be a proper trend trade, right? So if it goes higher, now what are you going to do? Now you got to buy the dip. So now our cluster comes in. 3A2 to 1618 puts you here. And if that holds, using it's, now eventually you're going to, I don't know, I'm exaggerating there, but right out of space. You know what I mean? So again, that's not what I want, but I got to keep my eyes open. So the market doesn't really care about what I want. All right. So money moving out of England or out of Europe. Where is it going to go? Maybe here. These are tough days. Okay. Very, very difficult days. You have a higher high, you have a lower low, and you start the day in the middle. Very tough day. Sure know what I'm talking about? Very difficult. I wouldn't have been too eager. All right. So let's, I guess we got to do Kiwi. Okay. This was obviously before the interest rate change. Get rid of that. It's no longer valid. So what's the next plan, Stan? There used to be a saying that you're only as good as your last trade. I think you're only as good as your next trade. All right. By the way, how about that? Let's zoom in. Let me ask you, do you believe market participants are using pivot points? M1 is a reversal pivot point, in fact. So New Zealand lowers interest rates and it falls down, hits the monthly M1 and stops. Interesting, right? No, Mark, I did not lose money yesterday on the Kiwi. But like, let's put this in perspective. Boom. Let's do it this way. And then back out a little bit. You see what I mean? This is an important area for me. And it might be an important area for other market participants too, huh? Green means up, doesn't it? Okay. Interesting, huh? So, the next trade, however, since I'm a trend trader, I'm going to look for things like this. Now, the first, maybe, kicking off the 5 EMA, I asked myself, where's the daily? Daily 5 EMA, and it's just too far away to be any use. All right. So the first one would be that the potential here would be up in this area of the 5 EMA, and then down. Okay, down to the S2. Let me adjust these pivots from monthly to daily. Just making that simple point. But I'm looking for support and resistance for today. I see. We're gonna have to. It's not gonna be helpful till tomorrow. So that's all I got right now. There's two potentials. One, sell it there. The next one would be sell it here. Okay. Drop into a smaller time frame. Says you already had your opportunity. So my spidey senses are telling me that we're probably going to come up and drop. So do what you want. It could be, you could be setting up here on the hourly to down. Just don't be surprised if you're frustrated by the trade. But the hourly says down. The target here is 85.5, and we are currently at 86.5. So 100 pip potential. More than a bird, more than a plane. So we got Canadian housing data. We got U.S. import price. We have retail sales. We have weekly jobless claims. What do you want to do? U.S. or Canada? See, I tend to isolate them in situations like this. I do that because what if they conflict?
New housing price index for April expected 0.2%.
We're approaching yesterday's high, as you can see.
Get the May advanced retail sales, weekly initial jobless claims, and May import price index in just a few seconds. Sales 1.2% is in line with expectation. Back month revised up 0.2 to 0.2%. Ex autos at 1.0% for retail sales is 0.2 higher than expected. Jobless claims at 279,000, 4,000 higher than expected. Back month revised slightly higher to 277,000. Continuing claims 2.27 million, well above the 2.19 million expected. Back month revised slightly higher to 2.2 million. Import price index 1.3% month to month is 0.5 higher than expected, with back month revised up minus 0.2% year over year and minus 9.6% versus the minus 10% expected. Back month revised up 0.2 to minus 10.5%. Canada capacity 82.7% is 0.3 lower than expected, with back month rise down 0.1. Canada house price index 0.1% is 0.1 lower than expected. That's weaker than expected data in Canada. Overall advanced retail sales in line with expectation, with the back month revised slightly higher.
All right. There you go. May import price index up significantly. Year over year still bad. Jobless claims up. So that's not good. Advanced retail sales as expected. Canadian capacity utilization about as expected. Slight miss on the housing price index in Canada. So did people sell at resistance? Trying to fit it in there. No, just it was mixed mediocrity. Euro USD hit the 112. We've already done that, right? We've already done the analysis. Didn't have it there though, did we? Dun, 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 dun. More than a bird. Yeah, it's the 200 EMA, if you recall. I had it highlighted. Right, so we had to come down into here. Do you remember I said I assume that's going to have an impact on the market? How many people remember that? I said it would drop to 112 and then some sort of either reversal if you're a bull or three-wave correction of some sort if you're a bear. How many people, like it was clear as day, right? I drew it out both ways. But both ways, 12 is going to be an issue, right? Cool. So in that period, since we've been doing this session, it's dropped 50 pips and now has risen 25 pips. Right, because it's the hourly 200 EMA. It's also a strike level. So remember, you have to, or let's say it's a it's a wise decision to try to anticipate what other traders are going to do. Not just worry about what you want the market to do, but what you think others are going to do. Daniel, did you get out of your short? How many pips did you get? Oh, all right. So it's just a little one. Would you have gotten more if you stayed in longer? I mean, you didn't aim for 12, did you? Yeah, okay. So it was just a 33.66 OCO? Yeah. Well, that's the downside to that, right? You wouldn't have hit 99, though. So I guess whatever. Congratulations. Good trade. Oh, good job, Igor. Yeah, day trader. Day trader. What are you going to do? Oh, good, Igor. All right. So that's that. So if you recall, the next trade plan, or next, let's say, opportunity for a trade plan, would be up to 112.5 and maybe down. That would be the safest. I can see how some people are going to be more aggressive than that, but you know, I don't know. What, it's 8:40 in the morning. Yeah, I mean, we're running out of time to be aggressive, right? But I guess the most aggressive way to trade this would be let it to rise on the 5-minute, but even then I still think it's going to go up to 112.50 and then maybe sell it. So, you know, even with the 5-minute. You see this, the dip below this, the daily central, retrace back daily central, drop it like it's hot, lower low, retracement, roll reverse, Stokes, drop it like it's hot. It's nice stuff, isn't it? It's loufle. Right? Now you can see that. It's not easy being green. So we're doing this right now. Good job, Gregors. See that, Fernando? Senor Marquez? Or is it Marquis? Why don't we fib that? It's the same thing. All right, sure. Instead of drawing roll reversals, I'll draw a fib. It's the same thing. Do 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 do. Do 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 da 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 do da da do 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 do. What about trading a binary on it instead? Yeah, it's all the same, Mark. It's all the same to me. You could also just say, hey, I'm going to wait for a 5A cross down. Guess what? It's going to do it at a fib retracement and a roll reversal. It's all the same nonsense. Okay. What time is it? 45. Let's make it an hour or so. 45. 13, no, 14 o'clock. See if we can get it to the 618 just for fun. Clearly, someone's taking the 50% retracement. It's not necessarily the 21, as you see there, because most people don't trade a 5-minute 21 EMA, right? Like, who does that? The boys at Deutsche Bank love the 5-minute 21 EMA. Right. Come on, Bubba, a little higher. A little higher, Bubba. Oh, green candle. Oh, snap. Put. Got it 112 and a half. Yay, let's see what happens. Say patience, grasshopper. Patience. Oh, by the way, this is a cash chart. Watch this. If I move it to my binary chart, since I have a TradersWay account, I have the added luxury. Oh, hang on, I got an EA going. I have an added luxury, as you can see here. Oops. Oh, I have to do it on a different chart because I have something drawn there. Oh, well, that ain't going to work. Let me back out. Sorry, I got my analysis done on a daily chart. 4 hour. Okay, let me adjust this just slightly so you can see it. Okay, back to a 5-minute chart. You see? Ah, I keep messing that up. I put 250, but then I changed the time. I keep doing that. Anyways, so I got my entry. You can see where I entered. And it's just a binary. So I can't lose more than I'm risking. It can go up 1,000 pips. It wouldn't matter to me. But in the next hour and 15 minutes, if it's lower than my entry here, which is precisely, let's go to the open position here. If it's lower than 112.52, see, I even got 2 pips better than I wanted. If it's lower than 112.52, I double my money. Booyah. No limit required, no stop required. I don't have to babysit this. I can just move on.com. And we'll just leave it at that. So, hey, thank you for being on my team. Thank you for being a client to TradersWay. Here we are. We have a binary option on our MT4 account. How nice is that? Another way of looking at it is I can open up this window, go to my trade window, and there's my binary option. My Euro USD BO. I'm in at the 112.52.1. Cool, huh? Isn't that nice? Right on my MT4. So anyways, just having some fun. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. It's Thursday today, so I must be at FX Street tomorrow. I'll see you over there. And please, 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 please leave a comment on the video on youtube.com/c/TradersWay. See you tomorrow.